What if I told you that you don't need to be rich, lucky, or a financial expert to make money from the stock markets? In fact, some people are building wealth right now while they sleep. In this video, I'm going to show you how beginners invest in the stock market and make money from it.
Don't play with it, don't be dishonest. Ay, still not understanding.
Let's start from the basis. The stock market is simply a place where people buy and sell shares of companies. When you buy a stock, you're not just buying a number, you are buying a small piece of a real company, like a piece of cake, and like a cake, a whole cake, and a piece of it is cut out. That's how the stock market is being described. That's how stock is being described. The company you buy from, once it grows, your money also grows with it. Many people think the stock market is only for bankers, economists, or rich people. But the truth is, anyone can invest in stocks. Even as a beginner, if you understand the basis, you can. Now, the stock market is simply a place where people buy and of sell shares of companies. And when you buy a share, you're simply buying a small piece of the company. Now, what is a stock? A stock simply represents ownership in a company. For example, if you buy shares of Apple or Dangote Smith, you at that moment you become a part owner of that business. Be it Apple, Dangote, Nvidia, so on. You become a part owner of that business. When the company you bought shares from grows and make profits, the value of your shares increase and you may earn dividends. That is to say, a share of the company's profits be given to you. So that's a dividend. You may earn dividend from it. There are two main ways people earn money from the stock market. Through capital appreciation. This simply means buying a product at a lower rate and selling at a higher rate, maybe after 5 years time, 4 years time. For example, buying a stock for 5 naira and selling in 5 years time. In 5 years time, you're not selling these stocks for 1,015 naira. You can see that the person has gained, and also you can earn through dividends. So companies pay investors regularly for just owning their shares. Some investors focus on long term. So please, when you're investing, put in mind that you're investing for long term, except for retirement, except you're investing for retirement. Because retirement investing can be for short term. As a beginner, before you start investing, these are the things you ought to do. One, set clear investment goals. What are you investing for? Is it for future, retirement, or maybe you want to start a business? Before we continue, why don't you drop the reason why you are investing? Why don't you drop your goals? Remember the saying that as every one of us, our physics is different, so is our arts desires different. So our goal, our financial goals is also different. So I might be investing for business or to travel out of the country. You might be investing for that. But somebody else might be investing for starting a business or donational wealth. So you have the reasons why you are investing. And I want you to drop it in the comment section because I'm going through it. I want to know the reason why you are investing. And also, let's continue. So, why are you investing? Is it for business? Is it for growth? Is it for generational wealth? Or is it just that you just want to invest to buy things that you love? Or you're just investing to get your new car dream? Or any other reasons? There must be a reason why you're investing. So, you have to set a clear investment goal. So you'll be able to stick to it. So you'll be able to have discipline when investing. So, as a beginner, you should aim for long-term goals and not fast making profit scheme or quick money scheme. 2. Start with what you can afford. Never invest money meant for food, rent, school fees, or emergency needs. Yes, because some people are fond of doing this. They are investing their school fees today and they know they are going to pay the school fees next month. Imagine, and they are going to invest it. And by next month, they'll be waiting for the money to have grown. How? The stock market does not work like that. If you're investing, you know that you're investing for 3 years, sometimes 4 years, 5 years. That's a long-term investment. Please invest what you can afford. You can start with 5,000 naira as the lowest, 10,000 naira, even with 1k. Yes, you can invest. You can start investing. Also, remember this that you can start small. You don't need millions of naira to start investing. You can start with whatever you have. You can start with your 1,000 naira, you can start with your 5,000 naira, you can start with your 15,000 naira, you can start with 10,000 naira. What you can actually afford, that you can start with it. What matters is consistency. It doesn't matter if the money was big. Doesn't matter if the money was 10 million naira when you started. No. Don't wait till when you have 10 million naira before you start investing. Don't wait till when you have 5 million naira, 2 million naira before you start investing. No, uncle. No, auntie. No. You can start investing now. As in right now. In fact, even after watching this video, you can even go ahead and start investing. 3. Learn before you buy. As a beginner, you should always understand the company you're investing on, whether a big company or a small company, whatever company it is. What you should put it in mind before investing. Like, ask yourself this: what does this company do? Is this company reputable? Does it make profits for the last 2 years? Was it profitable? Was it making profit? Does it have a good reputation? Yes, this should be the questions you're asking yourself before investing. Let's take for example Dangote Smith. And if you ask yourself this question, does Dangote Smith has a good reputation? Yes, for the past over years, you can see that Dangote Smith has a good reputation of paying dividends, they are still growing, and so many others. You can also ask, is Dangote Smith, has it been profitable? Yes, it has also been profitable. And what does this company, this Dangote Smith company, what does it do? It's a construction company that deals with building materials. This is something you have to know the basis. You have to know the basis of the stock you want to invest in. Don't just go there and start investing. Or you start investing because someone said, or because of social media hype, or because you don't want to be left out. Because everybody are doing it and you don't want to be missed out. That's why you're going to go and invest in that stock. Please don't do, because sometimes at the end of the day you end up crying. So as a beginner, know the stocks you're investing on. Know if it's reputable or not. Know if it has a good fundamental basis. You have to know the basis. You have to know if that company has a good fundamental basis. And if it does not, please, auntie, uncle, find one that do so. There's Dangote Smith there, there's MTN, there's so many that you can actually look at for. You can look for their fundamental basis. And the one you love, the one you feel like, oh, I love this, yeah. I don't know if you understand me. The one you feel like, okay, it's good, it's okay, you can also deal with it. 4. Open a brokerage account. To buy stocks, you need brokerage accounts. Think of it like a bank, but this one is simply meant for investing. And this brokerage account helps you to sell, buy, and track your investments. And you can have this platform. You can download them on your phone. Something I like about them is that it's compatible both on iPhone, Android, or laptop. You can use this app on any of them, and you can download them on your Google Play or App Store. And these platforms are: you have the Afro Investor 2.0, you have the Optimus by Afro Invest, you have the Carrywise, you have the Trove, you have the Rise Vest, you have the Mission Babu, you have Bamboo, and so many. All you have to do is just to go to your Google app or your Google Play Store, or you go to your App Store and just check for these ones I've listed. Check for the one you know it will be compatible with you. Check for the one you know you love very well, the one you will love to start to invest. So 5, diversify your investments. Never put all your money into one stock. So spread your investment across all companies and industries. For example, if you want to invest, not just maybe you want to invest now, you're going to go and invest in bank sector, and in that bank sector you are buying UBS shares, you are buying Zenith shares, you are buying GTCO sales. No, all you have to do is just to pick one. If you are buying UBA or Access, pick it. Let it be Access. You move to the next stock, and that next stock, maybe a building construction stock, just buy just Dangote and move to the next one. If it's Dangote you want to buy, mind you, these stocks I'm saying that are not for recommendation purpose. They are examples. I'm just using them to make examples. So maybe in construction companies you can take Dangote Smith as an example, and you move to the next one. Maybe the next one you want to invest in oil sector. Don't just invest in Wando, you're investing in corn oil, you're investing in Seplat. No. Why don't you pick one from those 3? You can invest in Seplat and move to the next sector. In the next sector, you can, okay, maybe you want to invest in this other sector, maybe food sector, or maybe, yeah, food sector. You go to, maybe you want to invest in food sector. All you have to do is pick one, maybe Nesto or Bar Foods. So just take one from it. If you are going with bad food, that should be it. So why do you diversify? You diversify to reduce risks and help to protect your money. Yeah, because most people their risk profile is either high, medium, or low. So you have this high risk profile. Please diversify your income. Diversify your income. Learn to diversify it, because this helps to reduce risks. This helps to put you in place. This helps to protect you, and so many reasons. 6. Be patient and stay consistent. The stock market goes up and down, and this is kind of normal. And many beginners lose money because they panic and they sell too early. As a beginner who wants to be a successful investor, do this. Stay calm when the markets drop. Think, invest regularly, and think long term. When you're investing, your investment should be long term. Mostly when you're in your 20s or late 20s, or you are investing for generational wealth, whatever it may be, please, it should be long term, except you're investing for retirement. Yes. Common mistake beginners should avoid. Whether you're a beginner or you're not a beginner, you should learn how to avoid this mistake. One is trying to get rich quickly. If you're investing because you want to get rich quickly, no, investment should be meant for long term, except you are investing for retirement. 2, investing without knowledge. You should know the basis of every investment you are doing. 3, following rumors. Please stop following rumors when you are investing. 4, checking prices every minute. And 5, selling out of fear or panic. Remember this, that the stock market transfers money from the impatient to the patient. So this is the main reason why you have to be patient when investing. You have to be patient when you are investing. Your investments have to be long term and not just short term. Investing is not gambling. It is a smart way to build wealth over time. And you don't need to be rich. You don't need to be an expert before start investing. All you need to have, or all you need to do is basic knowledge, discipline, and patience. Start small, stay consistent, and let time do the work for you. Don't forget this. Your journey to financial goals starts the day your money starts working for you. And if you found this video helpful, do well to like, do well to share to friends and family, do well to subscribe to this channel, and comment stocks if you want a beginner friendly investing guide. Thanks for watching. I'll see you in the next one. Bye.